Hi, Catalina, founder of LoanSense here. This video is for lenders and loan officers. Today, we're going to discuss how LoanSense helps 2 out of 3 student loan borrowers reduce their debt to income in 21 days, and as a result, allow you as a mortgage loan officer to increase the number of loans you're originating and the value of the loans you're originating from your current customer pipeline, as well as how do you reach future prospective customers. And we can even go back and talk about reaching past customers to remarket, okay? So this video is gonna be talking about those strategies along with how do you use the LoanSense lender tool and guide a conversation with the borrower. Okay, it's very important for our generation. And I have to start with this because our generation right now is being delayed from home ownership by 3 to 5 years. And the reason we're delayed, the number one reason, is because of student loan debt impacting our debt to income, okay? Luckily, there are federal student loan programs in place to help us manage our student loan debt, lower the impacts of the debt to income, even if they're in forbearance, even if a borrower is in forbearance. You as a loan officer can have the tools to make and have an intelligent conversation to help that borrower understand what are their options. The best part is the lender tool will automatically invite them to the LoanSense platform where we will help manage all the student loan paperwork and report back to you the improved debt to income, okay, across all 5 mortgage types, because we don't expect you to become an expert at student loans, but we also know that dealing with them appropriately will help borrowers be able to get into a home. I see on Facebook first-time home buyer groups every single day talking about, oh, can I buy a house with student loans? My loan officer said I can't because I have student loans. And if we follow the narrative of common articles, if you Google buying a house with student loans, saying pay down your student loans before you can buy, our generation will not be buying a home until 43 years old because that's a national payoff date, right? Around 45 years old. Because people go back to grad school and accumulate a ton of grad school debt. So addressing student loans is not addressing a problem of someone with no money. It's addressing a problem of 45 million Americans across socioeconomic spectrum, all the way from the doctor and the lawyer, all the way down to, those without a degree, because 4 out of 10 borrowers took on debt with no degree, which means that horrible impacts on their debt to income with no paper to prove they got that education, which allows them to get a salary increase, right? On average, right? I'm not talking about every single person, but on average. So today, LoanSense is going to talk about a little bit of these strategies because we must address student loan debt if we're going to help this generation buy a home. Think about how much the market has increased in the last 3 to 5 years. This is equity our generation is losing out on, wealth building our generation is losing out on, and we must address these problems as lenders and loan officers if we are to be relevant and help more of our generation originate, okay? And it's also a competitive advantage for you because you are the financial advisor really to the common person. And you have a lot of power to improve the lives of millions of Americans if you just understand a few of these strategies and tips. And we're here to support you in doing this because it's such an important mission for us to help more borrowers of our generation. Okay, I'm going to stop the talk and now go into some of the strategies. So current clients, right? When you pull their credit report and you see student loans, we have a list of what the federal servicers are. But if you know they're federal student loans, you can pull up our tool immediately, run an analysis, because why market to borrowers, get them in your pipeline, and then turn them away without running an analysis if they can improve their affordability, right? That's number one. Number two, future clients, right? We have a batch of loan officers that have already run our ads, have helped us modify the language, and have lowered their cost per click by about 50 to 80 cents. From over $2 to about $1.50 a click. And they're booking more appointments with prospect borrowers. I'm really impressed because this batch of loan officers know exactly the number of people shopping for mortgage with student loans in their market. One loan officer was telling me 89,000 in her metro area are shopping for mortgage with student loans. And I said, okay, imagine if you could reach 1% of that population in the next year. You can speak to 1% of that population, 890 people. And imagine of those 890 people, you can originate a percentage of them. Let's say it's 5%, originate approximately 40 more loans. Like, imagine that, right? Just because there's a competitive advantage of you're addressing the pain point that other loan officers are not speaking to. You're niching yourself to address the pain point, solving a pain point, and simultaneously helping with the mortgage purchasing decision, okay? And of course, we encourage loan officers and lenders as a whole to pull up their Encompass data, Calyx Point, whatever your loan origination system is, and see how many people you've turned down due to high debt to income, okay? And of those high debt to income turndowns that you provide adverse action letters to, or even if you originated but you see they have student loan debt, you can go remarket to them. You could say, hey, can we help you with your student loan debt so you can increase your affordability? Or you can remarket and say, hey, you took out a loan with us. Would you consider refinancing cash out to pay down your student loans? Because interest rates are low right now and they're about half the rate of the student loan interest. So is that of interest to you, right? There's marketing opportunity for current, future, and past clients that have student loan debt. And now I'm going to go a little bit into our tools and how we help. So this is an example of a lender tool. This lender tool, this is a demo tool, right? It's a lender demo tool. You can get this lender tool to have your name, and it's your tool. And it's the platform under which you invite customers to learn very specifically about how they can improve their debt to income. And we will include you on all those follow-up communications with the consumer, with the debt to income details, as well as how to go about getting the documentation to get through underwriting. So let's say someone's income is, let's say it's $65,000. By the way, you pull up their credit report or they're talking to you, you realize they have student loans. You want to put in this item here, just federal student loans. If they have private loans, don't include them here. Include the private loans right here, their monthly payment of their private loans in the other loans. But you want to include the federal student loan balance here, okay? What is also great is, unlike mortgage wants borrowers to have the highest proof of income, right? Well, on the student loan side, we want them to have the lowest proof of income. So, hey, your income this year is $65,000. What was your taxable income on last year? Okay, they say it was slightly lower, $63,000. Okay, perfect. You can even enter the lower proof of income because that's the documentation we will ask them for when they come to the LoanSense platform, because that can improve their debt to income even more. So let's say their student loan 6.5%, their family size is 4, right? There's also advanced settings for you to manipulate the debt to income ratio, for you to manipulate the down payment amount. We start everybody with standard settings, right? You can change those though as the loan officer. And then you could talk the client through, and these are the outputs. Okay, your fully amortized student loan payment is $908, and we're projected to be able to get you onto a payment plan of $198. Again, this is an estimate because we have to pull their student loans and know exactly what type of student loan they have originated for us to get very specifically how to reduce this by what amount. But this is an estimate, and it's showing this person now is going from affording a $172,000 house to about a $294,000 house, a payment of around $1,000 to a payment of around $1,700, right? A little more than that, improving their affordability for a home by about $121,000. That's a lot of money. So I want to bring up a couple points loan officers have asked us as they use our tools. Number one, they ask us, well, what if I'm using 0.5% and $80,000, 0.5% is $400. And let's say $400 is better than this 189. Should I still encourage them to come through the LoanSense platform? That's a question asked. Like, here we know $80,000, 0.5% is $400. You can do the math right away. 400 compared to 198, 198 is lower. Therefore, you should definitely invite them. But let's say 0.5% is lower than what we're saying the after amount is. If it's lower, you should still invite them because we ask them for the lowest proof of income. We get more details than what you're getting in this calculator. Whether you should pay or subsidize for them to go through a process, if the calculator is showing we don't improve it, you should not. We have very specific criteria on who you can sponsor the Loan Sense experience for, very specific types of clients. And as you get better at this, you will know who is prime candidate, because think about the ROI. If you can originate a mortgage of $100,000 more, what does that return to you, right? What is the basis points you make per loan? What does that return to you? The return in most cases exceed how much we charge to work with that client, which gives you an ROI of, the average ROI we're seeing for loan officers is approximately 3 times, right? So you have to make that decision. But the point is, this tool acts as a client inviter. I'm just going to enter my personal information here. And you want to enter the client's personal information. And you're going to click increase my client's purchasing power. And what's going to happen is right now, this tool is generating a Mortgage Coach rent versus own. That's part of our integration with Mortgage Coach. And the reason it's so powerful is because it includes optimal blue rates, daily rates. So you're getting this report with the optimal blue daily rates. You can, if you're a Mortgage Coach user, you can highlight, you can add video content, you can highlight to the bar. You see it's using the optimal blue daily rates. What is their payment? Now $834 with optimal blue daily rates of a conventional 3% down versus what is it if they get Loan Sense's assistance, right? From a monthly payment perspective, all the way down to the aggregate amount of loan value they can obtain, right? So that's what the rent versus own does on the Mortgage Coach side. The beauty is whether you sponsor or don't sponsor the Loan Sense experience for your client, you click one of these buttons and it's going to invite your customer to the Loan Sense platform to answer 5 questions, upload their student loans, and get a student loan plan. They will enroll all their paperwork straight on our dashboard, okay? And we will report back all the debt to income improvement data along with how to get the documentation for underwriting, both to the borrower and to you, the loan officer. That's so important because we're here to work with the client, but also work with you because you need to know this information in order to underwrite the borrower for a higher loan value. So again, reiterating the value of our tool, really analyze what is the estimated student loan payment amount against 0.5 or 1% you would consider. After January, people will be kicked out of forbearance and be required to pay again. So it will be less of an issue. But in the event someone just graduated from grad school, got a job, and now is looking to relocate to an area and purchasing and they're not in repayment, you can still do that analysis, right? I'm just going to go update the tool. You can go redo the analysis and really compare the after payment to the 0.5 or the 1%. Now, a question I also get from loan officers is, what if they're not paying a fully amortized payment? What if they're already on some form of a federal program? That does not matter because we still do an analysis for what is their projected payment and can we get them onto a better federal student loan plan, because we can still improve the debt to income. Even if it's changing the repayment amount by $100, that still improves affordability, okay? Our calculator assumes they're on a fully amortized payment amount compared to a federal program. It is not including what is their current payment plan because there's no way to know that without them pulling their student loan data, right? So we do get that question. What if they're already on an income-driven repayment program? And I say it doesn't matter because the likelihood is they're not on the best one for them because there is no federal system right now that walks you through the best one for you, especially not if you're married, because there's a lot of factors that go into the decision for married borrowers. So Loan Sense can still add value. If there's people in CADVERS and default, we can help them. It's just not going to fit the 21-day time period because if they're in default, they're basically in default, late on their payments, or they've just consolidated their loans. Those are circumstances that will take us more than 21 days. We can still help them. They're just not candidates for you as a loan officer to consider sponsoring. We help lenders create the criteria under which they will sponsor because there is an ROI. Happy to walk you through the ROI analysis. That will need to be another video though, because this is already 14 minutes. You are welcome to please come to our daily lender calls. I host, and it's my favorite part of the day, I host a daily lender and loan officer call. I will post the calendar. It is calendly.com/loansense-lender demo. It's with a group of loan officers every day. I take only up to 5 loan officers because I want to make sure to get to people's questions. People come with questions all the way from marketing questions all the way to, I have a parent with a Parent Plus loan. They want to buy another house, blah, 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 blah. They took on X amount more debt. Like, I'll go through scenarios with loan officers as well. And you could see here, like the number of spots remaining. I take up to groups of 5, and I do this call daily. I try to do it daily. And so we want to get you the answers, and we want to help you become the advisor for student loan borrowers in order to help them achieve home ownership. So please join us on our mission. We're really, really excited. If you want to talk about how to get started, how to launch with your own tool, of course, we love Mortgage Coach users because they're dedicated to borrower education. We can still launch our service for non-Mortgage Coach users as well. Thank you for your time today.